Ghana's cocoa sector is grappling with falling global prices and domestic price tensions that put pressure on farmers and policymakers alike. Global cocoa prices have retreated significantly in recent months after historic highs in 2024. In response to this downturn, Ghana's government recently cut the farm gate price nearly 28%. And this adjustment reduces the local price paid to farmers to align better with global benchmarks, aiming to make Ghanaian cocoa more competitive for international buyers. Now, this price cut has also sparked concern amongst farmers, who argue that decline in earnings and rise in input costs are squeezing their already fragile incomes. While still in Ghana, its government has paid 10 billion cedis in interest under its domestic debt exchange program. This marks the sixth coupon settlement since the country began restructuring its domestic debt and amid the deepest economic crisis in decades. The ministry says the payment aims to reassure domestic and international investors and support the country's credit outlook. This latest settlement is the second full cash payment with no payment-in-kind component, signaling improved fiscal capacity and stronger solvency position. To discuss this in a lot more detail is Winston Tackie, who is business journalist and analyst, who joins us from Accra, Ghana. Winston, good morning to you. Many thanks for joining the Global Business Report. Winston, Ghana has made its sixth payment under its debt restructuring program. How are the ongoing debt restructuring efforts influencing its economic stability and investor confidence so far?
Thank you very much for having me. And also this sixth payment under the debt restructuring program, and basically Ghana has made 1.9 billion in principal and interest for 2025. This effort lowers debt service costs from 7.7% of GDP to 4.1% and helps economic stability by reducing our risks as a nation. It also builds investor confidence as Eurobond yields fell below 10% and ratings are stayed at B negative. Before this debt issue came up, we had very difficult challenges in how we could best manage our debt, considering the constraint that came on our economy in the last 3 years. So we're going to the IMF for this particular debt restructuring program, has brought some kind of relief in the last 2 years that we've seen some positive ratings in the last year. I had information from the economic advisor to the president of Ghana, who said they are positively looking forward to see some positive B rating from Fitch and Moody's in the coming month.
Well, based on that response, Winston, which macroeconomic indicators are you tracking to evaluate translation into real economic improvement for Ghana?
Now, to check if debt changes bring real improvement, we first of all track the GDP, which basically fell below 70%, fiscal deficit also under 5%. And as of now, Ghana's headline inflation rate is at 3.8% year on year, with the gross international reserves, which stands at $13.4 billion as early as February 2026, which is over 4.2 months of import cover. GDP growth is about 4%, and the private credit has also grown. Just last week, we saw the reference rate, which is a rate that the commercial banks are able to borrow to businesses and individuals, has also fallen sharply following the adjustment of policy rate. So it tells you that the sentiment and confidence in the market is basically being reflective of what is happening in the economy. As we are watching now, the yields on most of the bonds and banks are also giving us some amiable numbers, which is basically giving investors some sentiment that, yes, Ghana is ready to make business. If you also look at the trades on the Ghana stock market, as of now, there's so much liquidity. With this news of payment by government on interest, many people are looking for places to put their money. There's so much cash in the system. The stock market has been quite viable. The performance has been improved in the last couple of months, and this is looking good going forward into the rest of the year.
Very refreshing to hear. And let's move to commodities now. Let's have a look at what's happening there. As we know, global cocoa prices have recently fallen. From a supply-demand perspective, what are the main drivers behind this decline?
Now, cocoa is one of the greatest revenue contribution to Ghana, especially in terms of export. As of now, gold is leading, followed by cocoa. Crude oil this today has hit up to $70 a barrel, and certainly we are looking forward to getting some revenue from it. But global cocoa prices basically fell because of supply, which grew bigger from the West African sub-region, especially when we talk about the port harvest, which is basically about 7% above the average. And if you look at data from the National Cocoa Cooperation Organization, there's surplus of over 49,000 metric tons between the 2024-2025 season. So the demand basically has dropped from the Asian regions because most of the factories are not grinding as much as they do, and basically by about 17%. The European countries also, when it talks about demand, has fallen short of 4.8%. So it tells you that there's so much abundance in the market. Yes, still, the demand has also come down. Therefore, it's forcing most countries to cut down their FOB prices, and Cote d'Ivoire is following suit with what Ghana did last week by cutting their FOB prices because they realized that the sharp drop from $10,000 to basically around $4,000, $2,000. And it tells you that, yes, every organization or agency that goes into trading will likely face the differential, which has now become a burden on Cocoa Board and also Cote d'Ivoire.
And how does this drop in prices directly impact Ghanaian cocoa farmers' incomes and rural livelihoods? Also, what secondary effects might this have on rural economies?
Now, when falling cocoa prices were cut, especially the farm gate was cut from 41,000, for instance, in Ghana, for instance, from 41,392 per ton, Ghana cedis per ton. This basically gives about 2,587 Ghana cedis per bag, that is per 64 kilo per bag for every cocoa farmer, which basically lowers their income by around 28.6%. This basically will hit every rural farmer who has a family and tend to spend less. And basically, they will tend to spend less on school fees. The secondary effect will include they may basically affect their businesses. They are basically incentivized to smuggle to other neighboring countries, and people basically will be leaving the villages to the hinterlands for more avenues to do business. One threat to the cocoa farmer now currently is the giving out their cocoa land farms to galamsey operations, looking at how viable gold is, but gold is not as sustainable as cocoa farming. So most of them who may take the risk of giving out their farmlands will have immediate benefit should the gold price stay where they are, but should it come down, they will be at losing end. Interesting enough, Cote d'Ivoire also in talks with Ghana because they realize if they don't move quickly, they tend to lose out, to also cut down their prices and to align with Ghana's prices so that they can have enough in reserves for should prices go up, they can sell to make the difference.
Certainly. You know, we saw Ghana's President John Mahama also publicly sympathize with farmers over farmgate price cuts. As an analyst, how would you assess the effectiveness of the government's response to farmers' concerns here?
One thing that I always say, it is very risky to play politics with policy. The president basically showed sympathy for farmers after the cut, which is good for basically to boost their morale. The new model that the Cocoa Board has proposed gives farmers about 70 to 90% of the FOB price and clears the areas that have been in store for quite some time. That is, but its effectiveness basically needs more subsidies and more processing. So government has promised that by 2027, they look forward to processing about 50% of local production, which will eventually give more avenue or revenue for the country. Last week, the finance minister also met with local processors. We have about 10 local processing companies in the country, and they have said that they have the capacity to ensure they can meet the local processing demand. When you add value to the cocoa you produce, you harvest, the value goes like 3 times the value in terms of export. We already have some grinding companies, grinders in the country, but due to the future sales, fuel sales of our cocoa, they are able to get access to the right beans to process So some of them end up buying from other countries, and therefore the price go higher. But it appears the cocoa board is in talks with them to ensure they have discounted bean prices. Currently, the government has put out some new reforms, which after a forensic audit, basically, there's going to be the case where most people were prosecuted for mismanagement, financial malfeasances, and basically most challenges have to do with mismanagement of the finances of cocoa board.
So there are some steps already in motion and involving. That's good to hear. But there are also calls for Ghana to diversify its economy rather than rely heavily on cocoa exports. From an economic analysis perspective, what sectors might offer stronger diversification opportunities, and how could Ghana strategically shift towards these sectors, in your opinion, Winston?
Now, for immediate benefit for the economy, looking at where we are, government has basically been shut down from the external market, the Eurobond market. So for the last 1 year, it has all been domestic revenue mobilization. The T-bill market is the easiest way to have money. For government to ensure they have sustained economic boost that is reflected in the lives of the individual, it is important that we first of all begin to diversify our cocoa and also our gold and mining sector. Because cocoa certainly is sustainable. We can tell for over 80 years of cocoa mining in Ghana, cocoa farming in Ghana, it's been one supportive sector of the economy. It's easy to get access to jobs. The value chain is quite large. But if we also go into 50% of our export, let's look at basically oil and gas, because Ghana has potential for huge export of oil and gas. If you look at our tech sector, technology sector, there's been tremendous investment in Ghana. If you look at how most of the technology companies are performing in Ghana, they are doing amazingly well. And this will be capitalized should we decide to go into the market from the African continental free trade area. There's so much opportunity. If the market has been open for stock about 1.6 billion in terms of access to market. So if we decide to look at manufacturing of our chocolate and also open our tourism sector, one thing that we benefited immensely when it comes to the eyeball is when the YouTuber Speed came to Ghana over his streaming platform. It gives access to people to see how widespread Africa is. They came to Nigeria, certainly. He came to Ghana. All of them are tourism aspects that basically brings value of people coming in. Possibly in the near term, December, we should expect more travels in Nigeria and Ghana. And also we're looking forward to ensure that there's a lot of training for cocoa value chain, building capacity, the human capital aspect of the people, and which will eventually lead to economic growth.
Right, so certainly lots of activity there, and it's very refreshing to hear that these developments are in the works. Unfortunately, time is against us, Wednesday, but I want to thank you so much for joining us on the Global Business Report. We'll see you again very soon.